from Washington, D.C., this is Balance of Power with Joe Mathieu and Kailey Leinz.
Counting down to the Fed, just an hour away. Welcome to the Wednesday edition as policymakers prepare an announcement today on interest rates here in Washington that will likely not please the President of the United States. A fresh reading on GDP to take with us into this meeting. I'm Joe Mathieu alongside Kailey Leinz in Washington. Thanks for joining us. We're about a half hour away, Kailey, from our special coverage. And an hour from now, we'll finally get word on interest rates. This could be quite the test for Jay Powell following the last week or two that he's had with the president. Yeah, knowing that the vast majority of market participants expect the Fed will be holding rates steady, not to say that that's expected to be a unanimous decision. We actually could see dissents today from the likes of Christopher Waller or Michelle Bowman. But of course, it's likely that the vast majority of the members of the FOMC are going to decide not to do what the president is encouraging them to do, which is cut rates. And he, Donald Trump, is using today's GDP data as the latest evidence that a rate cut is necessary. He says 3%, way better than expected, too late. His favorite nickname for Jerome Powell, must lower the rate now. This after Ghana cut by 300 basis points, the very move that Donald Trump has been asking for in a rather different type of economy, because you can make the argument that a stronger than expected GDP is a reason not to cut interest rates today. The questions that Jay Powell will face from the likes of Michael McKee ought to be pretty entertaining when it gets time for the news conference. Maybe entertaining for us and not so much for him. Yeah, I wouldn't want to be in Jerome Powell's shoes today, but I do look forward to watching, knowing he also is likely going to have to face questions around how tariffs are actually impacting the economy. Because yes, that 3% print, stronger than expected, but a lot of that has to do with the effects of trade and the lack of the influx in imports we saw in the first quarter. It does have a bearing on overall growth, and that's the kind of data the Fed is watching. Look no further than Procter & Gamble. We're starting to hear about this now in some of the earnings reports that are helping to drive stocks for better and worse, depending on the case. So I'm sure we'll all be listening when this happens at 2 o'clock. Indeed, we will. But before then, it's 1:01 p.m. right now on Wall Street. So let's get a check on how stocks and everything else is trading ahead of the Fed decision and turn to Charlie Pellet in New York. Hey, Charlie. Thank you very much, Kailey. Indeed, 59 minutes to go. We are on Fed Watch big time. Complete coverage coming up 1:30 p.m. Wall Street time. Yes, it drops at 2 o'clock. And Fed Chair Jay Powell's news conference, 2:30 p.m. We got it covered on Bloomberg Television and Radio. Right now, stocks higher, holding on to gains. S&P up 14, 63.85. That is an advance right now of just about 0.2%. Dow Industrials up 26 on the Dow, a gain of under 0.1%. Nasdaq higher by 0.5%. The Mag 7 index pushing higher by 0.3%. Two members, Microsoft, Meta, will be reporting today after the close of trading. Right now, the 10-year ahead of the Fed decision, 4.35%, with the 2-year 3.88%. Gold is down $28 the ounce. Spot gold down 0.9%, $32.98 on the precious metal, while West Texas Intermediate crude up 1.4%, $70.20 now for a barrel of WTI. Deal news: Palo Alto Networks buying CyberArk software in a cash and stock deal, valuing the Israeli cybersecurity company at about $25 billion. CyberArk shares, they're up 0.9%. Palo Alto Networks down now by 5%. Balance of Power continues right now. Lots going on in Washington. Once again, your hosts, Joe Mathieu and Kailey Leinz. All right, Charlie Pellet, lots going on in Washington, indeed, but lots going on in the U.S. economy this week as well. As Joe and I were just discussing, we obviously got GDP data this morning ahead of the Fed's interest rate decision less than 1 hour from now. More data comes tomorrow with PCE figures, and it's Jobs Day on Friday, which also happens to be August 1st, the deadline for tariffs on a number of the U.S.'s trading partners to take effect, expected to be higher even in some instances than what we saw on Liberation Day, as the president is now floating perhaps a 15% baseline. And some countries, of course, getting fresh numbers from the president today. India faced with a 25% tariff now, according to President Trump, who posted that rate on Truth Social, also saying that a penalty for the above, which is India purchasing Russian military and Russian energy, in his lengthy Truth Social post, will also be applied starting August 1st. So actually, the total tariff we're talking about here, Joe, could be well above 25%. That's right. The president writing that India has the most strenuous and obnoxious non-monetary trade barriers of any country. Knowing that the White House was really hoping to cut a trade deal with India, and that was one of the first countries mentioned that they were reaching for here. Realizing as well, and the president says that August 1st deadline is fixed. That's Friday, and it's not going to move. We want to bring you to the White House on this Fed Day with all of this news in the air to get an update from Bloomberg's Tyler Kendall, who's on the north lawn of the White House. The president is back from his trip to Scotland, Tyler, and I'll let everybody know it's 93 degrees right now in Washington, and we understand that the heat index today will reach 109, where poor Tyler is standing. I mention this because the pressure cooker that Jay Powell is going to be in a little more than an hour from now, it seems somehow fitting to meet together today under the heat dome, no?
Right, exactly, Joe. I think that's a pretty good metaphor and way to put it, because President Trump already today has ramped up the pressure on Jerome Powell, though we should say when we saw his post earlier today, the FOMC was already in their meeting, so that means that none of those committee members ultimately saw his criticism. But he had been pointing to that GDP number that you and Kailey were discussing at the top of the show, which did show that U.S. economic activity rebounded in the second quarter. President Trump hailed it as coming in above estimates at 3%. The estimates were around 2.6%, really underpinned by perhaps recent tariff-related swings. There's a lot of different factors that we could get into when it comes to the data, and you look under the hood, including that business investment actually ended up weakening. But ultimately, President Trump tried to use this as a way to force his point here when it comes to lowering interest rates, and it continues on this trend of expanding on the White House's list of arguments against Jerome Powell, which has really gone from pointing to the data, talking about the stewardship of the economy, and to Jerome Powell's management of the central bank. We saw it on full display last week when President Trump put on a hard hat and went down to the Federal Reserve to view those renovations and criticize cost overruns. Though there did appear to be some sigh of relief almost, Joe and Kailey, last week, because President Trump said that ultimately those cost overruns did not amount to a fireable offense, amid speculation that the administration might be trying to build a legal case here to remove Jerome Powell. That doesn't appear to be on the table at the moment, as they say that they'll let him serve out his term until May of 2026, but it really does point us to what we're going to see when it comes to the debate that the FOMC members are having, and when we could expect that rate cut potentially later this fall.
Well, of course, a lot of that debate centers around the unknown impact of tariffs and the unknown rate of tariffs that is going to be applied depending on what sector or what country we're talking about, Tyler. But we learned at least what India will be facing come Friday, 25% with the threat of more. What do we need to know?
Right, exactly. And in his post on Truth Social, President Trump said that India has long been a friend of the United States, but ultimately their tariff and non-tariff barriers have been too high for too long. So any hopes from the country to get a more preferential rate appear to really have been dashed. This White House often talks about the goods deficit between the two countries. The USTR's office says that last year that ran around the tune of $45 billion. And really importantly, so that's the 25% rate around that goods imbalance. But perhaps we could also see an additional penalty. President Trump threatening here over India's imports of Russian energy supplies. The White House has long been threatening that they could impose a so-called secondary tariff on those countries that import Russian energy in a bid to try to get Vladimir Putin to the negotiating table, too, when it comes to the conflict in Ukraine. But this really comes against this stark backdrop, and Joe alluded to it at the top of the show. India was long prioritized in these talks. The Indian Prime Minister Modi was one of the first foreign leaders to visit the White House back in February after President Trump's inauguration. The country has been seen as a strategic partner to counter China, for example, and there were initial concessions put on the table pretty early on. India dropped tariffs on an array of goods like luxury items and motorcycles. They also moved to make pledges to boost U.S. LNG, for example. But Joe and Kailey, in recent weeks, it seems that India really seemed to toughen its negotiating strategy, particularly around U.S. agricultural products, and that might be a really big sticking point that we continue to hear about moving forward. Because at this point, India didn't get that preferential rate when you look at these other countries like Indonesia and the Philippines coming in at 19% compared to India's 25%.
All right, Bloomberg Washington correspondent Tyler Kendall live at the White House for us, braving the heat and also reminding us of the hard hat moment in the Eccles building last week. Thank you so much. The images, of course, of President Trump and the Fed chairman next to each other in hard hats probably going to go down in economic and political history books, considering, of course, the words President Trump was sharing with the Fed chair at that time included direct criticism of his rate policy, something that, of course, is nothing new. It's been going on for months now. President Trump is no fan of this particular Fed chairman, or at least his policy on interest rates.
And the fake news is saying, oh, if you fired him, it would be so bad. It would be so bad. I don't know why it would be so bad. So we have a stupid person, frankly, at the Fed. I call him Too Late Powell because he's always too late. I know within 3 or 4 people who I'm going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible. I'd love him to resign if he wanted to. He's done a lousy job. Jerome Powell's been very bad for our country. We should have the lowest interest rate on earth, and we don't. He just refuses to do it, and yet he's spending $2.5 billion rebuilding the Fed. He's a terrible Fed chair. I was surprised he was appointed. We're not planning on doing anything. We're very concerned. I believe that he's going to do the right thing. I believe that the chairman is going to do the right thing. I mean, it may be a little too late, as the expression goes, but I believe he's going to do the right thing.
Of course, the right thing President Trump thinks is the right thing is to cut rates today, which is not expected. So I think we all get the gist here. Let's play it now to our political panel. Jeanne Zaino, Bloomberg Politics contributor, is with us. She's a senior democracy fellow at the Center for the Study of the Presidency and Congress, alongside Maura Gillespie, Republican strategist and founder of Bluestack Strategies. So, Maura, obviously the president has not been quiet about how he feels about Chairman Powell and the Federal Reserve's policy overall. Does that mean we can expect something explosive and just as critical when the Fed ultimately likely does not do anything to change interest rates less than 1 hour from now?
Yes. Should Jerome Powell not do what Trump wants him to do, I'm sure the president will be on Truth Social and probably walk out to the nearest camera and share his unvarnished thoughts with all of us about how he feels about him. But I think I think the frustration is very clear, not only just with Jerome Powell, but with how the economy is being viewed. You're seeing Republicans obviously tout the fact that the numbers today were better than expected. But I do think that it's a similar problem to what Joe Biden and Kamala Harris had during the 24 race, was that they could tell us that the numbers were improving, but the American people did not feel it. And currently, most Americans feel as though they're financially behind. So you can't necessarily just gaslight them into saying, well, it's better than expected and things are going, So it's really important that they recognize that. And so for Trump, when he can't control something, it's better for him to have someone to point to blame, to say, well, if we had been able to lower our interest rates, the economy would be booming and you would be feeling it immediately. So it almost is a benefit to him to have this person to point to blame for people being, unhappy with the current financial situation that they're maybe facing. We're seeing that with not only grocery prices, but also housing. Individual home buyers. Mm-hmm. They can't buy a home. So bigger corporations and companies and investors are being able to scoop up what limited housing there is. That's a problem, and that in the long run, short-term also a problem, but in the long run creates even more financial strain for the American people.
Really interesting take, Maura. I'm wondering your thoughts on this, Jeanne. Do Trumponomics and Bidenomics have something in common where people don't feel so great? It's not reflected in the hard data, but people seem to know better at the kitchen table.
I think so. We did see the Wall Street Journal poll recently where the one thing that is keeping Donald Trump at least up in the polls for his overall approval rating is the economy. So his poll numbers there have not plummeted. They've plummeted on immigration, on the big, beautiful bill, on Epstein, but not yet on the economy. But if we just go back to the interest rates today, there is no question we all want interest rates to come down. Nobody, to Maura's point, wants to be paying this much on interest rates for a mortgage or a car or on credit cards. The problem is not Jerome Powell. It is Donald Trump's chaotic economic policy. And I think what we're seeing here is that Donald Trump is torn. He wants lower interest rates, and yet he has for decades been committed to this tariff fight. And even today, just hours before the Fed is meeting on interest rates, he is saying we're getting 25% on one of our closest allies, India, plus penalties for buying energy from Russia. So the only one Donald Trump has to blame for interest rates is himself. But of course, he doesn't have Joe Biden to kick around anymore. And so he has turned his fire on Jerome Powell. And it's going to stay there regardless of what Powell did today. I guarantee if they lowered him today, which they likely won't, he would still come out and eviscerate Powell for not lowering them enough.
Well, Jeanne, to your point on the president's policies perhaps leading to the interest rate policies that he is not in favor of, it's actually echoing what we heard from the ranking member of the Senate Banking Committee, Democratic Senator Elizabeth Warren on Massachusetts, on Balance of Power last night. This is what she told us.
There is exactly one person who is responsible for keeping those interest rates high, and that's Donald Trump. Jerome Powell said last month that he would have urged the Fed to lower interest rates last February, but for the chaos that Donald Trump has been causing over tariffs. If Donald Trump really wants to see interest rates come down, then stop creating so much chaos around tariffs.
So as we consider the uncertainty that there is around tariffs, Maura, could that actually, though, come to, in large part, an end this week? He says August 1st is it. That's final. This is the deadline. The tariffs are going into effect as expected. Is this the moment we actually get clarity, or do you think that there could be another kicking of the can?
I think that with how many countries have not come to the table and negotiated, it's going to be a big moment for Donald Trump. He knows this whole taco thing is grating on him. He doesn't like the idea that he is wishy-washy when it comes to something that, as you pointed out, he has cared about so deeply for so long. Tariffs. But I do think that for those who are in his cabinet and recognize that this could be really damaging to, again, we've talked for a long time about these short-term pains for the long-term gains. The amount of pain that will cause for everyday Americans who the tariff is going to be on the American consumer. So I do think there's going to be some negotiating that happens on August 1st, but it may be one of those things where, I mean, even with the EU saying that they're going to invest, the 600, it just, where is that really going in, and can they even do that? There may be some of those kind of other things to tout, and maybe the tariff isn't as robust as he's making it out to be. Maybe it's not the 15%. Maybe there's some sort of other conversation that gets shared about investments and things of that nature to balance out the fact that he's not going to enforce the 15%. That's, a theory that could potentially happen on Friday, but really the only person that knows how he's going to react to any of the news on Friday is Donald Trump.
Jeanne, I know you're dialed into Truth Social to see what the president is going to say after this. Typically, Jay Powell would be speaking to Wall Street. The market would be the audience, right, as he takes questions from reporters. But he knows Donald Trump is going to be watching him today. Does he need to speak to the president and deliver a stronger message following this announcement?
I think Jerome Powell, I give him credit. Under this enormous pressure and storm, he has held on. He has not been pushed out of his position. And so I do think he needs to speak to the market, to the president, certainly to the American public, based on the data, and tell them the truth. This is why we are not lowering interest rates, and this is what you can maybe expect going forward. The reality is that come Friday, if the president continues and we see tariffs go up on 160 countries around the world, 200 countries around the world, however many we haven't had deals from yet, that is going to put enormous pressure on businesses as we enter the school season, the holiday shopping season, who are working through their inventories. Prices will go up.
Jeanne, Zaino, and Maura Gillespie, many thanks to you both. Great panel and a great conversation as we count down to the Fed. We'll have much more straight ahead here on Bloomberg, including special coverage of the Federal Reserve decision and announcement that starts just about 10 minutes from now. So stay here on the fastest show in politics, only on Bloomberg TV and radio.
In the aftermath, of course, of today's stronger than expected GDP data, 3% growth, Joe, something that White House and administration officials are touting across the board. The Commerce Secretary Howard Lutnick says that Trump's economy has officially arrived. And of course, Trump himself says that kind of economy is one that could use some lower interest rates. So
6 months is what it takes. We've been asking that when it becomes Trump data, right?
I guess second quarter, they say.
Second half of the year or something like that. This is interesting. Kailey, as we prepare for special coverage here on Bloomberg that will not only include the announcement on rates, the statement from the Federal Reserve, but the news conference where Donald Trump's name is going to come up a lot. And I suspect that the word tariff is going to come up a lot as well. And we wanted to spend some time with Bharat Ramamurti, Senior Advisor for Economic Strategy at the American Economic Liberties Project, Deputy Director of the National Economic Council during the Biden administration, when we spent so much time talking about Fed independence. It's a different world we're in now, Bharat, and there are some who think that Jay Powell, just by simply holding a news conference, is a profile in courage today. How deliberate does he need to be when the issue of independence arrives at some point in this conversation?
I suspect that Chair Powell will do what he has done consistently, both during the Biden administration and the Trump administration, which is reiterate his absolute commitment to Fed independence. I don't think he's buckled an inch under President Biden, and he hasn't buckled an inch under President Trump. And I think he's been pretty data-driven when it comes to leading the Open Market Committee. And I suspect that he will reiterate that today when asked about it, which, as you said, I suspect he will be.
Well, as you point to the data-driven nature of the Federal Reserve, where, Bharat, exactly do you think this morning's data would drive them? Because, yes, 3% on the headline seems like remarkable growth, but when you look beneath the surface, what do you see?
Yeah, I think 3% is pretty misleading for a couple of reasons, right? We've gotten a huge whipsaw effect since the beginning of this year because of Trump's tariffs, where you saw a huge surge in imports in the first quarter of the year and then a huge decline in imports in the second quarter of this year, which contributed to these big changes in annualized GDP quarter by quarter. To me, what you should do is look at the two quarters together. And when you combine them, what you see is annualized growth of about 1.2%. And that's very low. But going into the year, people were projecting about 2% growth for the year. And so I think it's fair to say that the cost of the Trump agenda when it comes to growth has been about 1 percentage point on an annualized basis, which is very significant. Also below the headline, you see a decline in business investment, which again reflects what I think we've been seeing in the survey data of a lot of pullback in investment as businesses try to navigate and wait and see what's happening on the tariff front. Consumer spending was okay, but not very robust. There's a lot of troubling data under the hood of the GDP report. And I think that when you layer in the fact that we're likely to have a bigger impact from tariffs actually hitting prices in the second half of the year, I can see why the Fed is adopting a wait-and-see attitude.
Well, if we're seeing a slowdown here over the first half of the year, there are concerns about clearly where we're heading in the second half when the impact of tariffs finally begins to show up in the hard data here. Bharat, there's an expectation that the Fed won't cut today, but might be more likely to cut in September. Wouldn't that be the opposite?
Look, I'd be surprised if they tip their hand today. I think that they're going to want to see 2 additional months of data coming into the September meeting before deciding what to do. I just think that there's an enormous amount of uncertainty. Look, the way I see it is that you have a labor market that's been hanging in there. It's still low 4% unemployment. You're seeing some stagnation in terms of additional hiring, but you're also not seeing a lot of layoffs. So you basically have a stable labor market in decent position. Meanwhile, you have inflation, core inflation, tracking to be about 3% for the year, which is quite a bit above the Fed's target. So given the state of the labor market and the projections on inflation and data about year ahead inflation projections from folks being quite high, I can understand why the Fed's not itching to cut. And I think they're going to want to see 2 additional months of data, especially on the impact of tariffs on prices, before deciding what to do in September.
Well, of course, the Fed is not just kind of one monolithic viewpoint either, Bharat. We are expecting that we could see some dissents today from the likes of Christopher Waller, who has suggested he's worried about what could happen to the labor market if they wait much longer. How seriously would you take dissent today, knowing that there may be a bit of jockeying to be the next Fed chairman at play as well?
Yeah, look, I think without denigrating anybody, I think that that's a factor here. There are people who are looking to position themselves as a good choice for Trump when he makes his selection to take over for Chair Powell. Look, that said, I think Governor Waller has been quite accurate and quite prescient in his projections about where the economy is going over the last couple of years. And so I don't want to diminish his viewpoint in particular. But look, I think people are trying to position themselves for Trump's choice. And obviously, the president wants interest rates to come down, though, ironically, he's been going around talking about how the economy is absolutely booming. And as people watching the show know, that's not really a good argument for cutting rates. So he kind of wants to have it both ways.
Jay Powell will be walking into this news conference just hours after Procter & Gamble said it would be raising prices on about a quarter of its products in the U.S., Bharat. Mid-single-digit increases across categories, according to a spokesperson. What do policymakers think of a headline like that?
Well, it's concerning. You're hitting consumers where it hurts, the types of everyday goods that they're going to pick up at the grocery store, at the convenience store. We lived through it during the Biden administration. People don't like to see those types of everyday prices go up. And the way that the president has conducted tariff policy basically guarantees that those types of staples, from the things at the grocery store to the things you're going to buy at Walmart and Target, are going to go up in price. How much is the question, not whether it's going to go up or not. And when you have that prospect of price increases coming in the second half of the year, which could feed through into a more sustained increase in inflation, you can understand why the Fed is adopting a wait-and-see posture. As your previous guest said, if Donald Trump had come into office and done nothing, and just sat back, not announced any of these tariffs, and just waited, the Fed likely would have cut rates multiple times by now. That was the trajectory that they're on. But all of the uncertainty that he has introduced into the economy has not only squelched business investment, it has also made it basically impossible for the Federal Reserve to cut, which has, in effect, continued to lock down the housing market because nobody wants to trade out of a 2.5% mortgage for a 7% mortgage, which means nobody's selling.
Bharat, we have less than a minute left here, but if you could ask one question of the chairman at the news conference today, what would it be?
I want to ask him, what are the 2 or 3 data points that you're most focused on over the next couple of months as you make your decision for September? In the past, under the Biden administration, Chair Powell said he was very interested in inflation expectations, like you would get through the Michigan Consumer Survey and so on. That was a little bit surprising for me because there's some concerns about the validity of that data, but it was an important factor in his determination. What are the things that he's going to be looking at over the next 2 months to determine, in particular, how are tariffs feeding through to prices? Are there a couple line items that he's looking at, a couple sets of goods where he thinks the tariff effects are going to show up? To me, that's the real question, because I don't think that they're going to tip their hand as to sort of guaranteeing or strongly suggesting that they're teeing up a rate cut in September.
All right, Bharat, we appreciate you joining us here on Balance of Power. Bharat Ramamurti, Senior Advisor for Economic Strategy at the American Economic Liberties Project and Deputy Director, of course, of the National Economic Council during the Biden administration. We'll be back for more Balance of Power at 5 p.m. Eastern Time. We'll have the aftermath, the reaction from the president to the Fed's rate decision today, and they'll break it all down for you on a special edition of Bloomberg Surveillance, The Fed Decides, which starts right after this.